Are we facing yet another decline and another leg down in the US stock market? In my previous US stock market technical analysis video that I did in February, the US stock market had to contend with two major issues. The first is high inflation and the second was the looming interest rate hikes by the Fed. But fast forward 1 month to where we are currently at right now. Not only do the US stock market still have to face these two issues, they also have to contend with the Russia-Ukraine conflict. And so that begs the question of whether the US stock market is likely to face yet another decline and another leg down. And that is what we'll be talking in this video. In this video, I'll be sharing with you my technical analysis of the S&P 500, the Dow Jones and the Nasdaq. But before we begin, if you are new to this channel, my name is Linus and in this channel I share all things related to the stock market, so both investing and trading. If you want more videos such as this, make sure you subscribe to my channel because each week I release 2 new videos about investing, trading and the stock market. Alright, so let's first take a look at the S&P 500. We had our first serious decline in the S&P 500 from here to here. So if we take our price too, we see that the decline starting from the peak over here to where prices managed to find support at this area was a decline of around 11%. And then after this decline that we had over here, prices managed to find support at this price level over here of around $421. This area is a key support level because if you take a look at the left side of the chart from this point over here, this was the first time that prices managed to find support at this area, and then this was the second time. So prices managing to find support at this area is the third time that prices find support at this key price level. And then if we zoom in over here, we see that on this day, where prices find support at this area, prices also form a variation of the bullish pin bar. If you want to find out more about candlesticks, about how to read them and how to use them in the stock market, I have a video over here where you can check it out later on. But basically what a bullish pin bar or variation of the bullish pin bar tells us is that when prices form a bullish pin bar, it indicates to us that there's a high probability that prices are likely to move back up from there. And on top of that, we also see that volume on that day was especially high. And if we zoom out over here, you see that this volume over here was the highest in months. So the confluence of these three factors gives us a very high probability that prices is likely to find support at the area. So what are the confluence of these three factors? So remember, the first factor is the key price level over here where price managed to find support. So that's the first factor. The second one is prices forming a variation of the bullish pin bar. And the third one was high volume on the day. So when there's a confluence of factors, that gives us a higher probability that prices are likely to move up from there. And that is what we saw with prices. Prices found support over here and then it managed to rally back up over here. And on this rally over here, I was a bit more optimistic about the S&P 500 because it met some of the criteria that I was looking at. So the first criteria that I was looking at was for prices to move back up above the 200-day moving average. So the 200-day moving average is this black line over here, and as you can see during this decline over here, prices of the S&P 500 fell below the 200-day moving average. So for the uptrend to continue, I definitely want to see prices of the S&P 500 going back above the 200-day moving average. And you can see that this rally over here, prices did manage to go back above the 200-day moving average. So that was the first criteria that I was looking out for. The second criteria that I was looking out for was the follow-through day. So you can watch my video over here about follow-through days where I explain the characteristics of what to look out for in a follow-through day. But basically what a follow-through day indicates to us is that when a follow-through day appears on our price chart, this gives us a higher probability that the decline is ending and is likely to reverse back into the previous uptrend. So over here we had day 1, then this was day 2, day 3, day 4 and day 5. And then on day 5 we had the follow-through day confirmation. So prices increased 2.48%, which was more than the 1.25% that is the bare minimum that we are looking out for. And the day volume was higher than the previous trading session day. And the follow-through day happened 3 days after the initial rally. And that gave us a confirmation of the follow-through day. But on hindsight, we see that rally was a failed attempt. So prices managed to rally back up, but it stalled over here and it declined from there. Not only did prices decline back below the 200-day moving average, but prices also declined and undercut the follow-through day. And that tells us that the rally attempt was a failed one. And that's the thing about the stock market. No one can predict the stock market with 100% certainty. So there are times when I'm right and there are times when I'm wrong. But the great thing about the stock market is that you don't have to be right all the time to be profitable in the stock market. You can be right less than half the time in the stock market and still be profitable. And the way to do that is having the right strategy, proper risk management and the discipline to follow all of your rules. So where do I see the S&P 500 heading to in the coming days and weeks? So first things first, even though we are experiencing the second leg down in the decline, so the first leg was this one over here and then the second leg was over here, we see that the decline still falls short of a bear market. And how do we define a bear market? It's from the peak to the low, we want to see prices declining by more than 20%. But if we take our 2 over here, we see that the decline over here is actually less than 20%. In fact, it's less than 15%. So yes, even though the S&P 500 did decline a bit, it hasn't declined to an extent to be considered a bear market just yet. Right, and if we take a look at where prices are currently at over here, we see that even though prices did undercut this support area over here, prices managed to close up and above the support level and on above average volume. So this decline over here is likely to shake out the weaker holders. Moving forward, for the S&P 500 to be back on an uptrend, I want to see a couple of things. So the first thing would definitely be prices of the S&P 500 breaking above this resistance area over here. So at this price level of around $446, I believe that the S&P 500 is likely to face quite a bit of resistance at the area. So the first reason why is because this was a previous key price level. So there's likely to be a bit more supply at this area over here. The second reason is because of the two moving averages. So as you can see over here, both the 200-day moving average and the 50-day moving average is close to that price level. And when prices are approaching these two moving averages from below, these moving averages are likely to be a form of resistance for prices. So for prices to continue its uptrend, I want to see prices breaking above this resistance area and then finding support and then moving up from there. And at the same time taking out the high over here. And why do I want to pay attention to these things? Because firstly, like I mentioned, I want to see prices breaking above this resistance. The second reason is because when prices play out this action over here, prices will be forming higher lows and higher highs. And that will mean that prices are back on an uptrend. So that's my technical analysis of the S&P 500. Now let's take a look at the Dow Jones. For the Dow Jones, we also experienced two leg downs. So if we zoom out over here, we see that this was the first leg down, and then now we are experiencing the second leg down. And similar to the S&P 500, the Dow Jones managed to find support at a key price level. So this price level was around $336. And then after prices managed to find support at this key price level, it managed to break above this resistance area and then go above the 200-day moving average and also at one point over here above the 50-day moving average. But this rally was also short-lived because you can see immediately after prices break above the 50-day moving average, prices came crashing back down and went below both the 50-day moving average and the 200-day moving average. And then right now prices are finding support at this key price level that prices managed to find support the previous time. So we zoom out over here, we see that this is a very important price level. Because not only did prices manage to find support at this area over here and this area over here, but you see to the left side of the chart, prices also managed to find support over here, over here, over here, and over here. So the Dow Jones managed to find support multiple times at this key price level. And that is why moving forward, I want to see the Dow Jones managing to find support at this level and not decline below this area. And for prices to continue its uptrend, I want to see prices breaking above this key price level of around 346 and breaking above both the 200-day moving average and the 50-day moving average. And then ideally finding support at this previous resistance area and then moving back above this price level of around $357. So why above this price level of $357? Because this would mean that prices are no longer making lower highs and lower lows. They are making higher highs and higher lows. So what this will look like is something like that. So you want to see prices breaking above this key resistance area, then finding support, and then moving above this price level of around $357. So that's my technical analysis for the Dow Jones. Now let's take a look at the Nasdaq. So the Nasdaq was worse hit compared to the Dow Jones and the S&P 500. So we take our price 2 over here. We see that from the peak over here to the lowest point of the decline, we see that the Nasdaq actually declined to bear market territory. So we say that the market or individual stock enters bear market territory when its prices decline by more than 20%. So over here, we see that prices actually declined by about 20%. So out of the three indexes, we see that the Nasdaq was the hardest hit during this period of time. And this is not a surprise because in a high inflationary environment, tech and growth stocks tend to be the hardest hit. And the Nasdaq comprises a huge majority of this type of stocks. So if we see right now, the price action of the Nasdaq is actually quite negative because if we zoom out over here, not only is the Nasdaq below both the 200-day moving average and the 50-day moving average, prices of the Nasdaq is also below a key price area over here. So this price area of around 352 is a key price level because if we take a look at the left side of the chart, we see that the Nasdaq actually managed to find support over here and over here. So when price actually declined to this level, I'm expecting the Nasdaq to hold up at that level. Then if the Nasdaq managed to find support at that level and hold at the price level, then it's at least some bullish news for us. But if we take a look at prices right now, not only did prices break below that support level, prices are actually finding resistance at their previous support level. So over here we see prices of the Nasdaq declining below the support level and then it tried to rally back up, but you can see that it found resistance at this price level right now. So that's definitely a bearish sign for the Nasdaq. And if we take a look over here, we can actually draw a downtrend line. So the downtrend line would start from here, and we draw a line across over here. So if there's a change in trend in the Nasdaq, then a possible early entry for you is when the Nasdaq break above this downtrend line over here. But maybe if you're a bit more risk averse, then you want to wait for further confirmation. So you want to wait for the Nasdaq to break above this downtrend line and go above and finding support at this key price level over here. But that is only if we see a change in trend in the Nasdaq, because right now the trend of the Nasdaq is still in a downtrend. So those are some of the things to pay attention to for the Nasdaq. And that wraps up my technical analysis for the US stock market for the month of March. If you have enjoyed and learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and tips, make sure you join my Facebook and Telegram groups because in those groups I share weekly stock ideas, tips and news updates. You can join those groups by clicking on the links down in the description below. I'll see you in the other videos to your financial success.